Can you keep pace with the evolving ESG landscape? The 2024 certificate in ESG investing has been updated with the latest research and insights to help you become the in-house expert at your organization. Register today at cfainstitute.org/ESG certificate. That's cfainstitute.org/ESG certificate.
Welcome to Compound Insights, a podcast by CFA Society New York. I'm your host, Rob Rowan. Today we're here to talk about sustainability and ESG, a topic which pervades all of CFA Society New York's content all the time. And we're here with Anne Van Riel. Anne is Head of Sustainable Finance, Capital Markets at BNP Paribas. Prior to BNP Paribas, she was the Head of Sustainable Finance for ING Capital in the Americas. She also has some experience in project finance in the infrastructure and natural resources sectors in both North America and South America, and she worked in private equity for the Dutch Development Bank. Anne earned her bachelor's degree from Universidad del Pacífico and her master's at University of Maastricht. So Anne, thank you for being here on the podcast.
Thanks, Rob.
Could you talk a little bit, because I know a lot of people are interested in careers in sustainability, could you talk a little bit about your career path through the subsector?
Yeah, absolutely. And thank you for having me today. As you mentioned, I've had many different hats over the last 20 plus years. I started my career in the Netherlands, and early on I worked for the Dutch Development Bank, which is where I kind of got my first interaction with the cross-section between finance and having impact, in that case, mostly in developing countries. When I moved to the US in the end of the 2000s, I started out in project finance, which was, again, very much technical finance, but also with an impact. And that is where it really piqued my interest that you have to be very mindful of environmental and social risk with whatever you're doing in the financial space. For many companies, especially greenfield project finance, it requires a license to operate. So you need to really do your due diligence and also mitigate any downside risk when it comes to environmental and social elements.
Mm-hmm. Were those power projects, or what types of infrastructure projects were they that you worked in?
So I worked in project finance for 15 years, more or less. So I've financed many different things, toll roads, airports, mining, energy, so
nuclear?
Everything. Not nuclear,
okay.
No.
I was picking one
I think
of the
I would have
ones.
been out of a job if that.
Well, yeah, there has not been a lot of new ones until...
No, a lot of cost overruns.
Right,
nuclear,
maybe
so.
next year, but yes. Yeah. All right, well, so Anne spoke at CFA Society New York Sustainable event last week, and just add, if you're a member, you can log into our webpage and see the video of Anne and the other speakers there. But one thing that I was really struck by was how quickly things have changed since CFA New York started doing these types of events just 5 years ago. From your perspective, how has the landscape of sustainable finance evolved in these more recent years? And what do you think are the things that are shaping the industry now?
Yeah, sustainable finance is still in the early stages of its development. If you think about it, it started with just a few professionals in the finance world trying to develop this market. And you saw a big growth in 2020 and 2021. That's when we really saw the double-digit growth, both in the bond markets and also in the loan markets when it comes to sustainable finance. Nowadays, most large international banks have sustainable finance teams, but that clearly wasn't the case at least 5 years ago. So it's still in its early stages. It really is driven by a combination of different things. On the one hand, financial institutions have been really trying to focus on how to mitigate risks, right? And how to adapt to very big changes like climate change and how that impacts their portfolios. And on the other hand, you also have a very big contingent of new regulation, whether it's EU taxonomy, SFDR, and I'm not going to name all the acronyms, but
the alphabet
there's a
soup
lot of new regulation coming down from Europe, but also here in the US, right? With the SEC proposal for disclosure, the naming rule for funds. So sustainable finance is still in its early stages, but it's becoming more mature and integrated in various aspects of financial products and decision making.
One of the things that is amazing to me is there are massive geographical differences. You just outlined a few of them between the SEC and the EU. A lot of people get kind of hung up on just what they are and don't really think about what causes them, what the key drivers are. How do you read that? What do you think are the driving factors in this?
Yeah, if you think about it, the two economies and the way the economies is set up is very different. The US is driven by a shareholder model where shareholder returns prevail, whereas in Europe, it's more of a stakeholder model where employees and surrounding communities also have a bigger say in how companies are run. And that is also, I think, visible in the way things like climate change, sustainable finance are picked up by the two different jurisdictions. Europe is very much driven by regulation, very much driven by requirements around disclosure, whereas in the US, to date, none of that has materialized except this big subsidy program, if you will, that is the Inflation Reduction Act that will spur investments in renewable energy and energy transition technologies. So the stick approach is Europe with regulation, and US so far has taken the approach of the carrot to spur investments.
Yeah, that's interesting because one of the ways that I saw someone else describe it is top down and bottom up. So the EU came from top down, US came from bottom up, and it's still coming from the bottom up.
Yeah.
Because let's face it, ESG in the US is mostly the G.
True, and if you look at the numbers, it's also very widely different, right? If you look at the labeled bond market, Europe is in the high 30 or in the high 20s or low 30s in percent of what ESG volume is versus the total volumes. In the US, that's less than 10%.
Right,
So
right. Yeah, that
very
tells
big
you.
differences.
Yeah, that's a very important number. Another thing that has changed a lot during the time frame I just mentioned there is ESG data. The data seems to be cleaner, more available, cheaper, more reliable. But I wonder, in your experience in working these companies, how are people actually using it?
So ESG data has become more transparent and more widely available. I think ESG data means different things to different people, right? So ESG is very broad. It could be information about governance. It could be information about the makeup of your employee base, but it could also be your greenhouse gas emissions. So it's a very wide variety of different data points that is available and people are looking at. And investors are also using it in different ways. So at the very minimal, they will use it to make decisions on what not to include in their investment portfolios. There's broad exclusion criteria, if you will. The more advanced players will select very specific data points to make a very tailored fund to try to generate alpha. So we have to be very mindful on that ESG data is nothing more than any other piece of information, right? So it is just part of decision making. The more information you have available, the more you can pick and choose on what you use for your own internal decision making and how to steer that.
Well, another interesting sort of decision-making topic along this line is most people assume that the regulation is likely to keep evolving and probably keep expanding even in the US and probably in other countries too. How do you think the best companies adapt to these changes? And also, how do you think one of the tricky parts about regulation is there's regulation that comes out, and then there are the best practices that land on people's desks in the office. So how do you think the best companies are handling that?
So in this case, in sustainable finance, the reverse is true, right? It started with the voluntary guidelines across the board. So there's voluntary guidelines like the GRI that came up with what do companies need to disclose. There's voluntary guidelines from the ICMA, the International Capital Market Association, of what a green bond should look like and how that information should be disclosed. Everything up to this point is voluntary. And then regulation is starting to come based on what that voluntary experience has been. Same with the greenhouse gas protocol. That is an initiative that started with voluntary guidelines, and now the SEC is incorporating those guidances for their proposal to make it regulatory. So I think if you are a company that has been at the forefront of this and has started to integrate these voluntary things in their own reporting because they wanted to make sure that they're ahead of the curve, those will be the best prepared for any mandatory requirements. So there's in this case an early starter advantage because they will have the experience, because it will take it's not something that you can just decide today and be ready for tomorrow. A lot of these things are very technical. You need to gather a lot of data points. There's a whole industry of consultants these days that will help you with it, but they also cost money. So there's there's a lot of preparation that goes into it. So best practices are those that have started already and that are really trying to keep up with everything that's coming their way.
Yeah, the due diligence on the consultants part has become massive, right? Because there's so many of them, and there are so many more people with some experience at it. It used to be easier when there were fewer people that knew this. So-
Yeah, and I sometimes compare it a little bit to how financial reporting started, right? That also wasn't a thing 100 years ago until regulation started, and you started to have accounting firms, and accounting firms had more people to help you look at the data. So, and that has also professionalized over the years. So, we're seeing the same on the ESG data.
Yeah, it's funny. It makes me wonder. So, the one of the things that's amazing to me about this is a lot of people who are, let's say, as old as I am, will remember that CFA Institute used to be called AIMER, and it was the regulator of all of the investment reporting. So it's funny how things come around. I guess the other thing that is interesting to me is you'll know ESG data has arrived when it's thought of like plumbing. No one talks about it. Everyone depends on it.
Yeah.
Yeah. So I guess this is the part where, so one of the values that we really offer from this podcast is the ability to decide what you need to read. As people, and when I was an analyst, I always had a lot more to read than I could. So I'd like to talk about what's in your outlook now. so,
A lot of things, and I'm constantly behind. One of the challenges of this field is that it is constantly evolving, both in terms of regulation, but also in voluntary guidances and principles and best practices. So what I generally do to keep up to date is look at some of the dedicated news sources, such as Environmental Finance, Green Biz, Climate Bond Initiative, they Responsible Investor. Those are kind of in my inbox all the time. And then the rating agencies, they also have very good in-depth pieces like Moody's and S&P on specific subtopics. So a lot of reading to do, always.
not Fitch, my alma mater.
Of course, Fitch as well. My friends at Fitch will not like this. But
Well, I guess the other thing I'm wondering is, what do you think are the main trends for this year and the near future? This is the real value to a lot of people, is not maybe knowing where their career is now, but thinking about it in the future. So how do you all see the sort of longer run trends working out here?
So in the long run, all of this will be integrated, right? I foresee a time where you maybe not have a separate sustainable finance team. I'm talking myself out of a job here, but this will all be integrated in general decision making, right? Whether you're on the debt capital market side, loans, syndicates, everybody will have to have some base knowledge on these topics to remain relevant. So that's one. I think in the shorter term, and our research team that always puts out very thoughtful pieces have called this and next year the adolescent years. And I know you have a son in that category, but somewhat similar, the adolescence year where, we will see this market mature and information is becoming better available. Investors are adapting, demand will stabilize. So we think that these are really the years that we'll see a more mature market on both sides, on the supply and demand side. The other big topic for the next few years is biodiversity. I think people talk a lot about it. Nobody knows exactly how to measure it or how to integrate it, but that is something to watch out for. Some banks are already hiring biodiversity experts within their troops, so I think that's a sign that this is to come, especially with things like the task force for nature finance disclosure. So there's a lot of things happening in emerging markets as well, as we see the effects of climate change disproportionately affecting those countries. There will be more adaptation needs, more mitigation needs. So emerging markets will be at the forefront. A lot of exciting things for the coming years. Enough to keep us busy.
Yeah, it's just as you were saying that, there is a massive amount of change happening in emerging markets. Perhaps you can come back and talk about that.
Yeah. Or I'll send one of my colleagues.
Right,
Yeah,
that is its own topic.
That is.
Yeah. So, great. So thank you, Anne, for being here.
Thank you.
And thank you to you all for listening into this podcast. Next up on the podcast next week, we will have a recording from a person who has an interesting view into investing in the legal cannabis market. And some of the questions I'm going to ask him are about how you can get those yields in a place where you won't be afraid of federal action. So until next time, I'm Rob Rowan, and this has been Compound Insights.